Good day, traders. The 4-step method to high performance trading is a free course download for increasing your competence and your ability to execute your trading edge in live time. The link for the download is in the description box below. And the free audio program, the 7-step daily routine for high performance traders, is also a free download to develop your discipline, your confidence, and a winning mindset to master the markets. Again, the download for these links is in the description box. They're both free downloads. Let's get started.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about range expansions. We're going to be talking about news catalyst, explosive moves on day 2. And we're going to be talking about identifying signal days for potential explosive trade setups. Now again, just to repeat, everything you need is in this playlist. I've been compiling the most recent videos into this playlist, which deal specifically with timings, levels, behavior of price, the setups, the templates, peak formations we went over yesterday, trading setups, first green days, first red days, everything that needs to be covered to reinforce the material in the playbook in detail, as specifically, clearly, and as absorbable and learnable as possible. As we have been discussing the 3-day setups, 3-session setups, and the importance of the opening range and initial balance, Monday the opening range, Wednesday midpoint range of the week, and Friday the closing range of the week, we're going to talk about first green day today and some of the different variations that have shown up. We're going to talk about an opportunity that came on gold today, which was just an absolute textbook opportunity for traders. We'll look at the indexes. We'll look at some other 3-day templates that have evolved. And we're going to discuss how that 3-day setups are like waves in the ocean. They can just continually evolve from one setup into the next or morph. And my goal is always to find the best setup on an instrument, not to try and trade one instrument every single day. So if I can find one of the best playbook trade setups on any instrument, whether it's the Canadian dollar, the Swiss franc, the NASDAQ, gold, oil, the Japanese yen, the Euro Canadian dollar, whatever that may be, wherever there's an edge that presents that's 90-10, as opposed to just taking a trade to hopefully catch a pips or get a move or scalp in and out. There's low-hanging fruit. There's inside days. We're going to look at an example of an inside day today. And again, the importance of understanding the signal days, the trigger days that can tune us in to an instrument or over a basket of instruments. With 10 instruments, you can find one inside day. And then the next day in the session that you're trading, perhaps it will be evolving into a day 2 trend trade or a day 3 parabolic, whatever that may be. Let's take a look. Now we have a new week that started Monday, and we had a first green day. Now last Thursday we had a first green day, and an excellent question from a trader was, what's the difference between the first green day today versus the first green day on Thursday when we had Friday session? So coming back to understanding the importance of Wednesday is the midpoint range of the week. We had lower lows on Thursday. We are in a broken down market. No daily levels are broken until we get to our US session window. Now also I want to point out, coming back to the importance of levels, timings, behavior of price. We talked about peak formations yesterday that form the new day high and low of the day. So these blue lines represent the previous day's high and low, and they're formed by peak formations made in a session. They are not just little swing highs and 15-minute charts and this and that. They are actually the peak formations that form the boundaries heading into our next day. So we have a market that's broken down below closing price. So you'll notice we have a low of the day made heading into our new window, or a higher low. They break underneath after making a peak formation on top of closing price. Are they working the high or are they working the low? This market breaks down on the inside. On day 3, our Free Cash Friday, remember day 1, day 2, day 3, I'll repeat this over and over again. And then we break a level just prior to our US session opening. This is at 7 a.m. New York time. The market continues to break down in the New York open hour, which is this third candle to the low. We are below the low of the day. Now, if we take closing price to closing price, which is where the consolidation peak formations are on top and below of, that projects a measured move of 200% outside of the range for Free Cash Friday in a parabolic day 3 range expansion. So let's just go back and take a look at this chart again on understanding what a first green day opportunity is. First green day is a signal day for a potential buy low, low of session, low of day, buying opportunity in a dump and pump template. Now we're in a broken down market that has continued to break down. No daily highs are broken. Do you understand what that means? No daily highs are broken. Lower low on the inside. It's a pump and dump on day 3. Now let's take a look at Tuesday in our new week, new timing cycle. We have a market that has reversed through the high of the day, the current high of the day on Monday, after taking out the low of the week. And as one trader asked me, is this a short squeeze? Absolutely, this is a short squeeze setup on a day 1 for a first green day reversal. Now this is where you have to be looking and thinking. We have a high of Thursday that has dumped down on Friday. We have a market that has also pulled back inside of Thursday's low of day breakouts. As I said to one trader, he said, before the session started, he said, Stacey, do we have day 1 longs in the market? And I said, no, we don't. We have a reversal setup, but we have not broken any high of day daily levels yet. Now, you've heard me say this repeatedly. When a market coils sideways underneath the high of day without taking it out, or on top of the low of the day without taking it out, it is potentially coiling for a parabolic move. Now we had major red news on the calendar. This is a 1-hour chart. And so I want to repeat the importance of understanding the rotation of timing. I have heard a lot of material watered down, minimized, blown over, given lip service to. Okay, but I want you to understand when 1 hour comes to an end and a new one is beginning, if you are in or looking at getting into a market, if there is a setup there, I only go to a smaller time frame when I want to align myself with the larger other time frame opportunity that is presented. Now, this is why I want to reemphasize, as I repeated this last week, stop calling every up candle or every down candle a first red day or a first green day. Understand the template and how price behaves when you come to your timing window and what opportunity may be there if it presents. So here's the thesis. I don't know which way the news is going to go, but my overall thesis is that we could see a market trade back to the high of Thursday. Dump, reversal, consolidation. Let's repeat the phrase. Peak formation high, peak formation low, consolidation, new timing cycle, new week. We've already triggered the low of the week, peak formation high, peak formation low, consolidation. We have a high of the day, peak formation. But guess what happens on the first minute of major red news? This is our first bar on CPI today, and we had quite an explosive move. Now remember the template that we were just looking at, the first green day. This market has exploded off of the closing price level. So little dump and pump into the news itself. The level is closing price. Now the next question that I got, which was an excellent question from a trader, was I thought you said you only traded from the levels. We have a major red news explosive news catalyst release, which prevents me from getting into the market. Now, here's my theory on this particular setup itself. First person who enters this market, this is not a first bounce trade. And traders are going to ask why. And I've said this already, that we, on an hourly template, if this market was a first bounce trade, we needed to see it pull back and coil sideways into the new 15-minute cycle. Now we have a market that has now put in a peak formation high. So that's a red flag to go long right away into this market. We have a peak formation high, and then we have a peak formation low. Now I want you to remember, if traders bought this first bar on a momentum, looking for that momentum release, when it goes vertical at this stage, we don't know if that's just going to be a stop hunt, a false break. It is in line with our larger template, and if traders put a starter in there, they're potentially going to face this market closed at 60. We have a pullback all the way down to 25. So roughly a 35 pips of heat. So peak formation high, peak formation low. And as we talked about yesterday, are they working the high or are they working the low? Now, I made it specifically clear that in this type of situation, we may now be in a market that is a 1 hour, 2 hour, 3 hours to the high, or a 1 hour, 2 hour, 3 hour market, because it's driven by other time frame traders on the hourly time frame. So we have exploded out. There is still a possibility this market could have pulled back to the breakout level. Don't know. So I wait. And as I explained yesterday in the peak formation video, are they working the high or are they working the low? First hour makes a high, peak formation high, and a peak formation low. They continue to trade into that low until the new hour starts. We have a new hour starting. We'll just move this over one bar. A new hour starting right on this white candle. We're working into the low for the explosive reversal. The overall thesis is that we're going back to the high of Thursday on a first green day, dump and pump 3-day template. Now, we put our universal EMA on there. This is a momentum news catalyst based on the 1 hour chart. That's all that it is. So we have a market now that breaks out prior to the New York Open. So a lot of traders were reluctant to pursue this trade up high because we're at the high of the current day. But as I have repeated before, we're not really. We're inside. And I will participate in a move in a parabolic coil on the inside after it's already come from a level and it's on its way to the other level. So this market gave an entry as the new hour began. So we're entering into the 1 hour trend now. So think of it like this. Okay, if we just blow this up for a second, we got a few lines on here, but this first hour is like a first bar trade, but on the hourly chart. Other time frame traders driving this move. We're already back inside of Friday's breakout of Thursday's low of day. We've coiled sideways on top of that breakout level. Where are we going? We're going after the money. Shorts from Friday's session. We have a closing price level, which paid particular attention to. Remember levels, closing price and high of day levels. We have a high of day level that projects across from Friday, and you'll notice it's very close in line with our range expansion levels. But more importantly, timing. 9:30 New York opens up, and what do we get? We get a 3-bar reversal engulfment on top of the 100% expansion for the continuation vertical parabolic move back through the high of Thursday, through all these levels. So timings, levels, behavior of price. But a 1 hour, a 2 hour trade now. New York opens, and what does it do? It goes vertical on the open for 15 minutes. Takes out the high and 200% range expansion of our high-low range from rectangle of Monday. Coils sideways for 15 minutes, and the new 15-minute cycle starts for a 25 pip stop hunt before going sideways and then trading into the abyss, as I called FAFO land. But most importantly, this is just a news momentum catalyst timing the hour itself. 1 hour up, coiled sideways, second hour begins, a little peak formation low, engulfment back in line with our EMA on top of the 50% level of the first hour high and low. Peak formation high, peak formation low, working into the low, working into the low, reversal, engulfment, consolidation for the parabolic move into the New York Open and the measured move extension. a news momentum catalyst opportunity. Now, I want to reinforce that this is not trading the news. Okay, do you understand that? That's a 30-minute wait till the new hour starts. All I'm doing is aligning myself. I can't take this first entry because of CPI. I would have loved to get in at closing price with the thesis being this is going parabolic, except that we had a major news release. We wait, but the market gives us a very safe, low risk, manageable opportunity for asymmetrical risk reward in line with the existing trade. 1 hour, 2 hours to the high. That hour, 45 minutes into the session, into the New York session. Second hour, our high of day is locked in. They coil sideways, they've reversed and pumped back up and chopped up and down a little bit. Some traders shorted it up top. But in terms of the initial trade, we took out the high of Thursday. We've done a 250 pip move, give or take a few pips, for an explosive continuation trade in an existing momentum reversal trade after first green day on gold. We're looking at the NASDAQ. I'm just pointing out some very important aspects about recognizing. Again, we talked about peak formations, peak formation low. We had a peak formation high from Friday. We had week 1. Last week was week 2. Closing higher. Closing price of week 2. Week 1, week 2. Week 3 may blow off in the direction of the trend. Now we had obviously CPI that went vertical. Point I'm making is that we have a geometrical rectangle consolidation, closing range, breakout traders. Let's back this up on the 1 hour chart. Again, week 1 came out of the low of the month. October started, November, week 1. Week 2, and we'll just repeat first green week on week 1. Okay, larger time frame, the only difference I've talked about in closing price on the weekly high and low levels. First green week closes as a green week in breakout, coils sideways, peak formation low, peak formation high, a day 0, 3-day setup. Peak formation high, peak formation low, consolidation on top of the closing price of the week. Explodes parabolically. This is a 15-minute chart. New York session opens at our yellow box. The only thing we can do is continue in line with the existing momentum trade. Now, some traders may not have felt comfortable with this. We have a little peak formation reversal. It's a 1-minute chart. A 1-bar stop. Worst case scenario, targeting one expansion of the range as a potential profit target, which gave traders in the area of 75 pips. Just a simple low-hanging fruit continuation trade on a news momentum catalyst into the open of the session with a larger range expansion target in place. Don't have to go heavy in size, but just an easy continuation trade at the open. We have a rectangle. We have a measured move target. A very manageable risk, asymmetrical risk reward for a nail and bail opportunity after major red news. The same thesis applied with the S&P 500. If we just back this up a little bit, the same overall template. If we just go 1 hour chart, we had our first green week, closing price of the week on Friday, and we'll just project that across. That market closed as a green week again. Week 1, week 2, we're into week 3 now. We had a slightly higher high on Monday, peak formation high, peak formation low, consolidation, and the explosion on major red news. Already completed a full range expansion, a little bit more dragged out than the NASDAQ, so again, potentially difficult for traders to take this into the open unless they just were anticipating a continuation move, small ascending triangle on a 1-minute chart. But we're already inside of a 200% range expansion. This market ended up completing 100, 200, and almost a 300% range expansion as we speak. So again, into the open of this session, traders in an existing momentum move, we go back to our hourly chart. We have 1 hour, 2 hour, anticipating potentially a 3rd hour trade setup or trade hour opportunity in an existing explosive market. And again, you'll notice the importance of recognizing the highs and lows. We've broken out of this initial peak formation for a range expansion continuation in a very strongly trending market. With any of these trades, if I was to position myself into the market, into an existing momentum news catalyst, as I have repeated and reinforced, at any point if this market was to reverse against me, I would cut the trade, because this is a momentum news catalyst opportunity. After CPI, we've got a fundamentally driven market at this stage, so you have to absorb the importance of that. After news has been released and we're in a longer time frame template, we go back to our hourly chart, we have range expansion happening in this market. Okay, it's being driven by other time frame traders and other fundamental characteristics. Little high, little low, consolidation, ascending triangle for a continuation trade on the S&P 500. We can look at the euro, same type of template. We'll just go back to our hourly chart for 1 sec. We can see the high of Monday, day 1, day 2, day 3, reversing inside, consolidating midpoint range of the week, a higher high on Thursday that breaks down, coils sideways. So we have a false break, reversal on Thursday, a market that triggers the low of the week before reversing inside on Friday. Friday becomes our first green day. Closes above the open. Let me just blow this up a little bit. Friday closes above the open and closes as a first green day. Monday, peak formation low. So yesterday's video, we reinforced that the next day, our levels, our high and low levels of the day, are formed by peak formations in a session. When we come into the new day, they make a higher high before we get to our US window. So remember what I said yesterday. If a market's making new highs, that peak formation is no longer valid. Peak formation low. So coming back to a phrase that has been repeated several times, do not countertrend the peak formation. Well, what that means is if you understand the significance of the high and low of the day and these peak formations, you can help develop your thesis in a day 2 coil. Thursday, Friday, consolidation. So peak formation, low of the week. We have a peak formation, low of the week. It's still intact. Okay, it has not been broken. Friday's low of the week is still intact. Thursday's high from our mid-range point of the week is still intact. We have a Thursday, Friday consolidation, peak formation high, peak formation low, coiled sideways, first green day. Higher highs coiling underneath the high. Go back and study day 0 from the playbook, and we have the high of the week just below that. A market that coils sideways without taking out the higher the low is preparing for a potentially explosive move. Now here's the best part, because the hindsighters will say, oh, it all looks good in hindsight, except that we're waiting for the news to give us a thesis and a confirmation of a potential opportunity in line with this existing template. We wait for the news. One of the things that on any given day, if you're not sure of any range expansion, use the day itself. The day that the range expansion could occur, I use that day itself as projected 100% expansions of the range. So we could say a 200% expansion is our first potential target, except that we're going to wait and watch how price behaves into our timing window and how long are we in that opportunity. So in the case of the euro, we had CPI that went vertical. An example again of where traders may have positioned themselves right on the first bar. So if they position themselves in the first bar and this market continues to go higher, we know what? We know that the high of the day or a peak formation high is not yet in place. They make a peak formation high. This is still first hour, and it continues to go higher. Continues to go higher as we head into our end of our hour, into our new hour. The new hour starts right here. Let me highlight that for traders. The new hour starts right here, coiled sideways inside of our EMA for a asymmetrical risk reward. Small stop. We can even use the low of this range as our stop, entering in on the engulfment or the small bear candle inside of our EMA. Beginning of a new hour for the continuation trade. For low stress continuation, we'll go to our 5-minute chart just to see our overall targets. As soon as I'm in this opportunity, the market continues. I'm already looking at my other time frame objectives, because that's where our targets are going to be, and that's the time frame that's driving these trading opportunities. So we have an opportunity at the beginning of this hour now for a range expansion, possibly in line with our larger picture of another 100, maybe 200%, which this market gave an easy 50 pips to traders continuing. And as an example of why I say to traders on a reversal trade like this, when it's a range expansion, DNC, do not counter trend, because as we can see at this point, this market may not come back. It's so important to understand when you can stay in a trade for a range expansion. This is not a stop hunt. This is a reversal trade coming off a first green day with a measured move range expansion target. Now, the larger box that we can talk about is our rectangle from the high of Thursday and the low of Friday. And we'll just project those levels across. That forms our rectangle. So I'm just using the high and low levels. And as we can see, it almost aligns perfectly with the same thing we had on our Tuesday for a 200% range expansion. And remember what I said, this is a box, prices in a box. And I'm using the levels that every single trader has access to, the low of Friday and the high of Thursday. That's our last day one, day two, because peak formation high, that failed, peak formation low, that market is traded down into it on Monday before reversing and closing on top of the first green day close for a higher close. Coil sideways, that forms our rectangle, which essentially, roughly speaking, is 50 pips. If we go number to number, just outside of 50 pips. But more importantly, we have our levels, our high of day, low of day level, Thursday, Friday, coil inside. This is a day zero template. After the news, position ourselves, tight stop, using the clock, or even first bar for traders who wanted to enter in on the momentum, euro, pound, different volatility as opposed to gold, and larger template, measured move, profit target in that picture. Well, I want to reinforce the importance of the day zero. I've seen a lot of, again, watered down regurgitation of what that is. It is a specific type of 3-day opportunity. Sometimes it can be 4, as we saw Thursday, Friday, Monday inside. Tuesday's the trade. Day 1, day 2, day 3 coiled sideways. First green day for the explosive move after the news, but in line with our larger time frame template. Everything is in here that you need. You just need to be patient, step back, understand the bigger picture. Another excellent question from a trader was, what do you mean don't focus on 1-minute charts? What I mean is this. If you have no larger time frame type of thesis in terms of how you want to trade this market, traders will constantly be looking to counter trend a market because it's up high or it's down low. As I always repeat, retail loves to counter trend, and you know, they miss the opportunities, or they don't see any opportunity to go into the existing trade long because they're too worried about counter trending it because it's broken out of the high of the day. They miss the larger template of the 3-day setup, which is why I will just repeat, dump and pump. There's only 2 types of templates: dump and pump, pump and dump. There's trend trades, reversal trades. And on the day itself, it will be either a dump and pump template in line with the trend, or pump and dump template in line with the trend, or a dump and pump underlying a larger template for a reversal trade opportunity. So we have, again, just big picture here. We can look at a larger box, high and low of the week, for a measured move range expansion on Tuesday after CPI. So these measured move targets are just 100% expansions of the range. They're nothing fancy. It's not anybody's new idea. This has been around for almost 100 years. Edwards and McGee, Schabacker, Peter Brandt was one of my mentors, and I learned a massive amount. This is asymmetrical risk reward. When you can position yourself in an opportunity that's going to potentially go on a range expansion, and you may be risking 10, 15 pips on a currency pair like this, and you're targeting 50, 75, maybe 100 pips, depending on where your opportunity to enter the market is on this given day. But the same thing applies on any instrument, whether it's gold, whether it's oil, whether it's an index. If we have an opportunity to participate in a range expansion or a measured move, this is how I can scale my trading business up in size. Keep it simple, traders. Day 1, day 2, day 3. Do not get in front of the news. One trader mentioned to me today he shorted the NASDAQ yesterday and he's held on to it and he's now caught. If we go back and take a look at that market, we'll just bring this up on a chart. Again, my goal is not to try and buy something and hold it for 5 days or sell something and hold it for a week to try and catch the high or catch the low. I'm looking for opportunities in my session that are scalable, reproducible for asymmetrical risk reward that are 90-10 best trade setups. That's it. Nail and bail, hold, whatever, 1 hour, 2 hour, 3 hours out of the market. It could be a 1 hour move. It could be a 2 hour move. It might be a 45-minute move, 1, 2, 3 on a 15-minute chart. It might be 15 minutes on a blow off. But whatever that market offers me on the day on the instrument that I've chosen, that's it. That's my work day. Lock and load, take the money and run. Scaling up in size, rinse and repeat. 5-star opportunities, 3-star opportunities. High week, low week opportunities, session trade opportunities. Master your craft. Don't hang around trying to catch pips and catch moves and get more and give back more than what you got. Don't engage in impulsive, irrational, emotional activity at the screen. Don't average into losers. Don't over leverage. All these things that people read about and talk about, and when they're in live time, do something completely different. Master your emotions, master your skill set in live time. Learn to master yourself. Discipline, confidence, and a winning mindset to scale your trading business up in size. Have a great day, traders. Keep it simple, and may the markets go with you.